Traders, how sustainable is this dollar pullback right now? Is it going to last with the key FOMC rate decision in focus this week? Guys, Ken Chifo back with another fundamental and technical update. Let's jump straight into this. Baby, before we jump into this key fundamental and technical update specifically for the US dollar, you may remember a few weeks ago, I did note in the TFTC, the Fundamental Trading Club Discord, that I was going to be uploading more educational lessons via the Fundamental Bootcamp course, which you can check out. I have been uploading a series of value there, additional value, new changes, new dynamics, new cycles, as we're ever changing in these macroeconomics in the market. So things that are going to help you stay on top and give you that edge with however you're trading on a technical level, whether you are intraday trading, whether you're swing trading, position trading, scalping. These are all things that can give you greater edge with your strategy. So I've been uploading some more lessons there. There's a couple of more strategies that have been added, and I'm still going to be adding even more. So we continue to revamp and update that course with further value. So if you are interested, you are more than welcome to check that out if you want to take some of this. I don't gatekeep. You can take it. Take it is there for value. Now, obviously, I mentioned in my previous YouTube video, right? Because I've been getting, like people say, oh, I've been getting a ton of messages. I have been getting a fuckload of messages since I did that previous video update on Reuters. Okay, I'm going to do a specific video breakdown for this, not today, another day. But as I say, I've obviously been in this game for a long time and I've developed a lot of strong relationships. And I do have a relationship which has been set up for you guys to capitalize. Obviously, I said to you guys in that previous video, this is like part of my daily routine. Okay, my computer is going extremely slow right now because I'm running a ton of things. I'm testing a lot of things at present. There's a lot running on my computer, so hence why it's going slow. It's not usually slow, but basically, this is part of my daily routine. I have a number of sources, but this is like big. This is key, and this is great for you guys because it simplifies everything. And all the key sort of key markets, all the key talking points that are being discussed, everything that you need to know in terms of those fundamental themes, they're being spoken about here. You got your nice little pieces in oil, you got your pieces with S&P, Nasdaq, everything. It writes these really nice summary articles. Okay, foreign exchange, giving you the key reasons why dollar's down today. GBP, giving you the key sort of talking points right now, what's expected for the Bank of England, the key events that are coming out. You get the point. There's a ton of value. Go into commodities, go commodities, bam, 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 bam. Got oil. Yeah, you got, I'm sure if we go to the right here, we will see gold as well. Yep, gold's telling you what the deal is with gold, blah, blah, blah. You get the point. There's a ton of value. And I'm saying blah, 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 but there's a ton of value and you'll see how invaluable this tool is. And as I say, this is like there's Man, there's a ton of sections to this, and I'm going to save it for another video. But there's some serious pieces in here, some great research pieces. People always like, "Oh, where'd you get your flow information, all that stuff?" Yeah, it's one of the sources, man. It makes it easy. So check it out. As I say, you can leverage it. If I were you, I would leverage that at least that free 1 month trial, or otherwise, when you're ready, you can get 3 months for the cost of one. Crazy. Like once you start using this, you'll see how much that you just won't want to continue trading without it. This is your baby. So anyway, guys, let's jump straight into this video. Hey, baby, happy Sunday. I hope we're all well and truly. Yes, we are back with another day in these beautiful markets. Guys, let's jump straight into this rundown. It's a big week this week. I seem to be saying that every freaking week. Let me just make sure my screen is sharing because, yeah, I would be upset if it's not. Okay, so we are sharing. Okay, cool. Guys, let's jump straight into this now. Look, I don't want you guys to get sucked in. I want you to, in terms of what's happening right now with the dollar, I want you to keep that open mind as that analyst. Obviously, we're traders at the end of the day. We execute as traders, but I want you to keep your mind open as an analyst and really observing things, okay? Because obviously continue to see that bounce in the dollar, and you could pluck things out of thin air essentially and be like, okay, yeah, there's optimism around US and China because they're both saying they're willing to talk somewhat. Okay, pluck that out of thin air. Pluck some way, for whatever reason, markets took the non-farm payrolls report on Friday as bullish. Okay, let's pluck that out of thin air. But really and truly, guys, what we're seeing right now is just it's a technical correction, it's a technical pullback, excuse me, not even a correction, it's a bit of a pullback, consolidation, profit taking. Markets don't move in fucking straight lines, but when they do, we have periods of consolidation and pullback. When they do, We have periods of consolidation and pull back. Like right now, look at the structure. I know I was stressing this last week, but I want you to stay with me here and just be in line with my thinking. Okay. Obviously, if you have another view, that's fine. Okay, that's fine as well, of course. We're not all going to think the same. Different perspectives are fine. And I encourage those. But nothing has changed yet, is my point. Markets is plucking all these things just for reason to that we're seeing this pullback, but this is technical for me. Nothing has drastically happened yet. You know, when you look here, China evaluating US offer to talk tariffs. All right, this is obviously being covered on Friday, late Friday, in the second half of Friday. Beijing is evaluating an offer from Washington to hold talks over US President Donald Trump's 145% tariffs. Chinese Commerce Ministry said on Friday, although it warned the United States not to engage in extortion and coercion. Okay, coercion. So, you know, they know. And the reason they're saying that is because they know from previously, you know, Trump's attempts in his prior presidency, where he came, you know, just trying to make all these rash, you know, negotiation attempts, and it's not going to sit with China. Okay, clearly, because you know the way they responded back in April with the levies of imports, U.S. goods, 125%. Then, so it says the U.S. The punishing U.S. tariffs on many Chinese goods saw Beijing respond as China labeled Trump's tariff strategy a joke. So, you know, they're just not willing to take bullshit either, right? They're not willing to take bullshit, hence why they've taken action back. And, you know, they're taking things with a pinch of salt as well, right? Until progress is made and they're actually making some negotiations, just take things with a pinch of salt. Now, as I said, this would be the breakthrough if we're going to get it. Okay. It would be the breakthrough that, oh, China, da, 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 but it's a long road ahead. Okay. We're going to have tariff talks for the whole of 2025. Okay. This trade war is not going away this year, to make things very, very clear. All right. So let's sort of keep that in our minds. All right. As I say, we take things with a pinch of salt right now. Now, I just want to quickly recap to last Friday. Okay. This week, obviously, it's a busy week this week. Let's bring up all data here. I'm just going to bring up the US a moment. I'm going to talk about a couple of things. Okay. FOMC, we're going to get onto in a moment. So, US non-farm payrolls, right? Markets getting, obviously, the reaction was pretty mixed. When we look at dollar, if we go to the 5 minute a moment, okay. All right. Initially, non-farm payrolls here. We saw a spike of dollar strength, then dollar weakened, then we paired back the move and gained more. The non-farm payrolls, okay, right. At plain sight, this is where net markets being narrow-minded, and it's just, for me, as I say, it's just an excuse to just profit take, you know, and see that dollar pull back. That's needed, you know, just fall back in line with structure for now, as I say, until anything drastically shifts us out of that. Okay, so non-farm payrolls headline: 177,000 jobs being added to the economy, but yes, okay, it is higher than expected. Fine, all right, not as bad as feared. But the previous once again revised lower to 185K, down from 228. So that offsets that number, in my opinion. Okay, so markets calm the fuck down. And look, previous numbers as well. Okay, previous figures. We are clearly seeing a slowdown in jobs in the United States. Previous numbers are being consistently revised lower. All right, and then let's put our attention on this. Average earnings, wages in the United States dropping down to 0.2% from 0.3. Okay, lower than expected as well. Why is this important? Because it's disinflationary. Okay. Inflation is, okay, yes, it's still a little bit sticky in the United States in some aspects, right? We're still not as close to the FOMC's 2% target, but we are cooling. Average earnings, what people getting paid in terms of money, it's gone down here. So if wages are naturally going down there, what do you think is going to happen to spending? Okay, spending slows down a little bit, right? People getting paid less, spending is going to slow down a little bit. But if spending slows down a little bit, what happens to prices of goods and services if no one's buying? Or if slowdown in buying happens? Consumption goes down. Businesses that are offering these goods and services are going to put down their prices. So that's disinflation, right? Inflation coming down. Again, unemployment claims jumping up to 241,000. Okay, that's a big jump there. Okay, it's a big jump because we've been holding steady for a while in these numbers. That's a big jump. The highest unemployment claims that we've seen since when? Since December last year. All right. So there's definitely cracks in the labor market starting to show. Fed's preferred measurement of inflation coming down to 0. Okay, lower than expected, which is disinflationary, but the previous was revised higher from 0.4 to 0.5. Okay, Either way, this is coming down. This appears to be coming down. We're on a decline here. Okay, disinflation. Employment costs, the costs associated to employment still remain a bit sticky there at 0.9%. Advanced GDP, bad number. Obviously, the previous revised higher, all right, marginally from 2.3 to 2.4, but this is still a huge contraction in this quarter. We haven't even felt the full effects yet of all this tariff crap. Ignore ADPs, privately conducted, who gives a fuck? Job openings, 7.19. Big drop there on the amount of job openings. Previous revised lower from 7.57 million down to 7.48 million. So this data is still screaming cool down signs in the US economy. To bring that all in with you, we're seeing signs of disinflation. Growth is fucking atrocious. The cracks are showing in the labor market. So calm down, market. Calm the fuck down. Okay. Wages coming down. Less jobs are being added. The previous are being revised lower. There are still downside risks, growing downside risks for the US economy, but we're seeing a technical correction for the Dixie. Technical pullback. And really, when we look here, if we come back down to this next major zone, because that's the next major zone on the weekly, this is the next major zone. This is the psychological level, and we will still be respecting structure. We'll potentially print a new lower high there for the Dixie. All right, so just keep that in your minds. Now, the dollar potentially has obviously room to continue to the upside near term. Obviously, as I say, we'll come up to here potentially. Maybe we even fake out above this zone, and subject to some further selling on the daily, right? But I want to just remind you why I'm focused on the bigger picture as well, is because the monthly, excuse me, the monthly is freaking bearish, right? Really, obviously, look, we could still go and close in the green, but as I said, we need that breakthrough. We need something significant, and it's not going to come from the FOMC. The FOMC, we'll talk about that in a moment. It needs to happen with US and China. Very bearish candlestick there. And I mean, when we look at the monthly together here, guys, such a bearish candlestick, we've got to see that continuation to the downside at least. Whether it be in this, probably not this week of May, okay, maybe not this week, but I'd say I'd like to see it happening at least from the week after that dollar continue to sell. Okay, perhaps things just markets just get tired of the US and China stuff, and there's negative comments coming out of there in terms of development or lack of development, in terms of progress rather. So when you look at the monthly here, really, can you see the next major monthly support? Because when I look at it, we could just pass all the way down through here. I mean, look at that along that dotted line. Can you see? Let's be conservative and go here. All right, so look along that dotted line. Okay, about 90, mid 93 region, 94 at the very least. So that's what I'll be looking at for the Dixie. All right, eventually, when we do come to the downside, I'm going to be looking at 94s, mid 93s, 94s. Bam. Okay, mid 93, 94s, and then further south, I'll be looking down here. Okay, at that 90 region. Can be seen. Can be seen. Okay, now let's get on to FOMC rate decision. What are we expecting? To be honest, guys, I think this will be I think it'll be a non-event. I think the dollar has opportunity to hold ground at the very least, remain resilient on this. But Jerome Powell's probably going to echo. The base case for me is that he echoes what he did last month. Okay, not committing to rate cuts yet. Obviously, if you look at June rate cut pricings, where all the volatility's at right now, when I move my fat head, markets are expecting still no change, 65.1%, 35%, whatever, are expecting a cut. So it's still leaning towards no change. Obviously, depending on FOMC this week, that these expectations will change. I think Jerome Powell would just be like, look, we still need to play it by ear, sort of wait and see mode, depend on these outcomes of these tariffs. Okay, particular focus on US and China. So him not committing to rate cuts, I think will help dollar a little bit. Okay. Obviously, markets are waiting for the signal from Powell in terms of rate cut, because obviously when that signal comes in, obviously dollar's going to get hit. But if he doesn't signal that yet and says it's not imminent, then by basically with the language that he says in terms of sort of wait and see mode. We'll see how progress of these US and tariffs. We're not committing to anything yet. Then I think dollar will hold some ground. Okay. But obviously, albeit over the sort of the coming weeks, still remains vulnerable. I still see vulnerable dollar. Okay. But as I say, it could just hold some ground on it being not as dovish as what it could be. Okay. In terms of Jerome Powell hinting at a June cut, because then that would be dovish. If he says, look, the FMC are getting closer towards rate cuts, if he says that sort of language, then we're going to be expecting cuts in June. That pricing is going to change and dollar's going to come under pressure. But I'm not sure he will yet. Okay, I think he'll want to sort of wait and see if there's any progress between then and June, ahead of June decision, before they commit to start talking about rate cuts coming for June for next month. It's only next month. I can't believe I said it last week. I can't believe we're at the freaking middle of the year of 2025 already. It's mad. All right, so yeah, maybe some upside this week for the dollar, but overall remains vulnerable. Guys, hope you found value in today's video. As I always say, this is just a tiny little snippet, just scratching the surface of the value that I put out every single day. Tuesday, Wednesday, Thursday, Friday, no Saturday, and then on Sunday for our big week ahead as well. But every day we're updating people on the markets, aside from the Monday. Obviously, what we're viewing, all the key talking points, all the key narratives, how that then translates them to the charts. And then, of course, looking for trade ideas, looking for opportunities, looking for breaking down trades and that I'm potentially looking to take, and obviously that I'm executing, or trades that hit my stop loss and why, because we've seen shift in X, Y, and Z, all of that, all that's covered. You can check out if you wish via the TFTC community. Okay, with the when you get access to the bootcamp course, you do get a month access as well to the community, which gives you access to the daily rundowns. If you are really, really keen, just and you sort of have any questions, shoot me a DM. I'm providing a lot of value at the moment. I'm in the mood to just keep helping people level up. So we got that. And obviously, if people are interested, I do still have a couple of spots left within my capacity where I am onboarding a couple of students that are serious. Obviously I do screen people that are serious for that one-to-one mentorship. So if you're interested in that as well, you can shoot me a DM. I'm most responsive, I guess, via Instagram or potentially via Discord. Other than that, guys, have a blessed and amazing week. Stay lit, stay blessed, and let's get it.